How's it going, everyone? It's Sam. We are looking at the next couple weeks and why October and even early November will just be insane for the stock market. Huge volatility, and there's a lot kind of riding on the next few weeks. And I'm going to talk about what I'm doing, what I think is best for you to do possibly. And of course, this isn't financial advice or anything like that, but I think there are some things that you should be careful of doing. And, there's a lot to gain and a lot to lose in these kinds of situations. So if you guys like this kind of thing, please leave a thumbs up. I really appreciate it. It helps out the channel. And if you do want to support in some way, we have some sweet merch down there. I'm getting mine in the mail hopefully in the next week or so. Also, if you want, through a couple more days, WeBull has their 2 free stocks if you deposit $100, and this is only going on for a little bit longer, so definitely take advantage of that if you haven't done that already. They're worth up to $1,600 each. So let's take a look at 4 different reasons why I think that the stock market is just going to be very volatile, very kind of crazy over the next few weeks, and we'll go through these point by point. So first of all, I want to shout out to AssetDash. So they're a partner of the channel, and I want to look at their website. They have all the different earnings dates for some of the largest companies in the world. They do the market cap real time too. They show that, but let's take a look at the earnings date of some of the largest companies in the world. So Apple, number 1 rank for market cap. Their earnings date's October 29. Next company, Amazon, October 22. Next company, Microsoft, October 22, October 26 for Google, October 30, October 29. Okay, we have November 11 for Tencent, then we're back to October 31, October 15, October 21, and as you go down, you can see the majority of these companies in the top 20 are October. This means that there's going to be a lot of companies coming out with their earnings, and it's going to give us a pretty good idea for how the economy recovered while we started to open up more businesses. So this is from July through September, and we're going to see how well these companies did after a lot of the country kind of started to reopen. How are consumers feeling? Where are they spending their money? How are they spending their money? Are we back to normal? Are people spending money like they used to? And kind of get a feel for how the stock market's going to recover going forward, because we saw a massive GDP decline. We saw a massive decline in earnings from a lot of different companies. And this is going to be really important going forward. Now, the next thing is pretty specific, but it is on Workhorse. So Workhorse is specifically, just because I want to cover this because so many people watch my channel for Workhorse. They are possibly going to get the USPS announcement this week or this coming week. I think that's going to cause the stock price to fluctuate a lot. You can see here it went up about 18% just on Friday. So that's something to consider too. That's going to cause just that company to go up and down a lot. So I'm not including that in the other reasons, but I think that's going to be something to look out for. The third thing, or the second thing, depending on how you look at it, that is going to cause this to fluctuate a lot and cause a lot of volatility is stimulus checks. So if you've been paying attention to the news, there's been some back and forth on whether stimulus was going to go through. On Tuesday, Trump said that he would not support any bill that was on stimulus. Then a few days ago, just on Thursday, I believe, he said that he would support a bill and a larger bill than Democrats or Republicans have been asking for. There's been some negotiating back and forth. And right now, we don't know what the stimulus is going to be or if there will be stimulus, but it's looking kind of hopeful right now. There are some talks, and we might see a $1.5 to $2 trillion stimulus bill. If we see stimulus, that's going to be great for the stock market. That is probably going to push it up as more companies have money and as more people have money to spend on the larger companies' products. So we'll see a lot of people being able to buy new iPhones, being able to buy a ton of stuff and be able to either invest or consume more. Now, the last point that I want to make out is how the stock market will react based on the coming elections. So we will know the next president of the United States in about a month, less than a month actually. And a lot of people are worried. A lot of people are saying that they're selling their stocks before the election. Some people are, holding off from buying stocks. And I think this is a nice little picture here, a nice little graphic to show how the stock market has done with different presidents. So you can see Republican presidents versus Democrat presidents. And after pretty much the 30s, after the 30s, it's pretty much just been straight up. I mean, you see dips here like at the end of the Bush administration with the housing crash. You see it here with 2000, but it's pretty much just up and up and up. Now, some people think we're in a bubble. Some people are saying that, we aren't overvalued. We weren't overvalued at least before the crash. Some people are saying we're overvalued now. But I think that it's really important to remember, if you average this out, it's pretty much a straight line all the way up and to the right. Now, I think that is something that's important to consider going forward. I personally, this is what I'm doing, getting ready for this election, getting ready for the coming months. I'm not changing a thing. I don't try to time the market by selling out. I will say if the stock market dumps off, I will probably buy more. And some people think that that is timing the market, right? Some people think that if you buy more, you're timing the market. How I consider it, if I wasn't planning on spending the money in the market, so let's say I put $200 a week into the market every week, so about $10,000 over the year. And that is what I've put towards stocks, and then I have money for spending and for saving and stuff like that. Let's say the stock market dips 50% and I start throwing $300, $400 a week in there. I don't consider that trying to time the market. That's like taking advantage of the market with money that I wasn't even planning on spending towards the stock market or wasn't even planning on investing. So that's what I'm going to do. If the market drops off, I'm going to take advantage. I'm going to put more money towards it, maybe stop spending a little bit more and just try to hustle my butt off to put more money in the stock market. But I'm not holding out right now. I'm still going to invest just what I've been investing all year, every week, every month, every pay period. I'm going to do all the same things that I've always done. So I do the weekly dividend investing series. I'm going to be doing that no matter what. I actually did a video on the Three Sisters approach if the stock market crashes, and I'll link to that at the end of this video. But I think it's really important to realize that if you just invest money every week, every 2 weeks, every month, whatever you want to do, and do it consistently, that is better than holding out for a drop in the market. I think that's the best thing to do. Just try to dollar cost average, try to invest over time, especially if you're investing in the S&P 500, then it's really not as important to try to time the market. Of course, if you're investing in individual stocks, there are bigger fluctuations. Not all the stocks come back from a downturn, so you have to be more cautious there. But generally, I'd say just continue investing. That is my unprofessional opinion. Of course, I am not a professional, like I said, so do your own research, do all of your own thinking. Don't just take my word for anything. Make sure you're learning about it on your own. Thank you guys so much. I really appreciate it. Let me know what you think about this. Again, I think we're going to see massive fluctuations between just all the companies announcing earnings, between the stimulus checks, and then just with everything that's going on with the elections. Thank you guys. I will see you in the next video. Again, if you want some sweet financial independence apparel down there, check it out. Also, if you want those 2 free stocks, get those too. Thank you guys so much. Check out AssetDash if you want. It's in the description, and I will see you in the next video. Bye.